Let's get into Apple. I get a lot of questions about Apple directly from investors and also from all of the media outlets. And I will tell you this, even though Apple seems to be out of the woods in the short term with this tariff relief on consumer electronics, I don't know if that is a permanent plan or if the Trump administration and our buddies over in China will go back and forth, back and forth, back and forth on this. But I will tell you, despite its rally, because the stock had been hammered, I'd probably stay away from Apple. Because one of the problems with Apple is, even before the tariff news broke, which could potentially increase the cost of their iPhones by about 50%, this company had a sales problem. It hadn't grown for about 4 years. The revenue forecast for this year is 4% growth. I don't think that that's achievable because one of the problems is the Wall Street analysts who are bullish on this name have always felt that putting artificial intelligence features on an iPhone would drive what they like to call the mother of all iPhone upgrade cycles. Well, that didn't happen at Christmas time, and it hasn't happened since. So here we have a company that probably goes into year 4 or 5 with no to little total revenue growth, and now its costs go way up. That is the ultimate profit squeeze. So please don't get tempted to buy Apple. I'd still stay away. The problem is twofold now, not just onefold, as I started talking about here on this broadcast over a year ago. The other thing I think is interesting is right now, Wall Street consensus estimate, and they haven't taken their estimates down yet, even despite this tariff beating. Wall Street thinks that this company is going to earn about $7.25 EPS this year. Now, Apple has a September fiscal year. I think worst case scenario with these tariffs, that number is 20% too high. That number at the end of the day could be $5 plus earnings per share this year, not 7. And I think even in a best case scenario, you're still going to take about a 10% hit. So far, the numbers have not been lowered. Maybe companies are waiting for Apple to report and guide to the future when they announce their results in a few weeks. But those numbers must be coming down. And no matter how cheap a stock is, you cannot buy it even as a value buy if the earnings estimates and revenue estimates haven't come down and hit their troughs yet. So keep an eye on that.